Hi everybody, Thomas here at Rebel Income. Economic reports in the last week have shown the economy may be moderating, enough to prompt the Fed to cut rates not once, not twice like a lot of experts have been predicting, but possibly as many as 3 times before the end of the year. The market rallied pretty strongly to finish this week on that news. Another theme that the market has been following for most of the past couple of weeks has been what some are calling the Great Rotation. That's a phenomenon that has seen investors pulling money from popular sectors like technology and moving into cyclical industries that would be expected to benefit from lower interest rates. One of those sectors is materials, which is a broad name for everything from chemicals to wood and paper products, fertilizers, metals, mining, and a lot more. The industries and stocks in this sector provide a lot of the raw materials that are used in every other sector of the economy to produce the finished goods that you and I use. If the predictions about lower interest rates are correct, I think some of the best opportunities out there right now can be seen in 3 stocks in the material sector that are all trading very near to their yearly lows. We're going to take a look at all 3 so you can decide for yourself if these are opportunities that you should be paying more attention to for the rest of the year. Now, before we dive into the fundamental reasons that I think these stocks are poised for big bullish moves, I'd like to invite you to support my channel by giving this video a like. You can also help me keep providing new content about how to change your financial life by hitting the subscribe button along with the bell so you'll get notified every time I upload new content. I also have a Patreon page where all of my members get exclusive early access to my videos. My free Patreon members also get access to my free investing home study video library. Paid patrons get access to a whole lot more. That link is in the description area of this video. Go ahead and check it out. Let's start by talking about what these stocks do. Nucor is one of the largest steel manufacturing companies in the U.S. PPG manufactures and distributes paints, coatings, and specialty materials all over the world for a range of consumer and commercial applications. FMC Corporation is an agricultural sciences company that provides crop protection, plant health, and professional pest and turf management products. Both Nucor and PPG saw sizable increases in price beginning in October of last year. Nucor increased in price by nearly 45% before it peaked in April above $200 per share. PPG saw a 25% increase in a much shorter period of time, peaking in December of 2023 at around $150 per share. Both stocks have dropped back far enough off of those highs to sit not far off from their October 2023 lows. They're also nearing recent support levels, which could give these stocks a springboard to start a new rally higher. FMC has been hovering not far off of its yearly low at $50 since early November of last year. While it has seen a few rallies near to, or even above $60 since then, it's been hovering in that general range for long enough to see both of its primary trends flatten, which are shown by the blue 200-day and green 20-day moving average lines, very near to each other. That's actually a very interesting technical pattern because a narrowing convergence between moving average lines is like a tightening coil. The smaller the range between moving averages, the tighter the coil gets, which increases the chances the stock is going to break out of its current range with higher than normal velocity. Since the long-term trend is clearly down, the odds are increasing that FMC is getting ready to start a new aggressive bullish trend. Technical patterns are a good way to recognize when the probabilities of a major reversal begin to increase. Those odds can be improved even more if the business underlying the stock is also strong enough to justify a higher price. That's a primary principle of value investing, which is my personal investing method of choice. Let's compare these 3 companies to see if their fundamental strength and value opportunity lines up with these technical patterns. I like to start my fundamental analysis by looking at a company's pattern of free cash flow growth. Growth or decline of free cash flow over the last year is a good way to see if a company has been effective in growing their profits. Nucor's free cash flow has more than tripled over the last year, while FMC saw a healthy 16% increase over the last year. In the case of FMC, it's also useful to see that they were able to reverse a pattern of negative free cash flow in the 2 quarters prior to the latest financial report. PPG saw a modest decline in free cash flow over the last year as well as the prior quarter. Despite the decrease, their free cash flow level remains healthy. All 3 companies have adequate liquidity. However, all 3 also saw cash decline over the last year, which isn't very surprising in the current economic climate. Nucor stands out from the group by virtue of the fact that they have more cash than debt. However, all 3 companies have balance sheets that would be considered healthy by just about any measurement. Our next metric will give us a little more insight about the company's operational efficiency, which can provide additional insight about whether current debt levels are manageable. Net income is a very straightforward metric. It describes the portion of revenues that's left after a company subtracts all business expenses. Dividing net income by revenues yields a percentage that is an easy way to see if profit margins are increasing or decreasing over time. Both Nucor and PPG have healthy, improving operating profitability, which is a strongly positive, bullish indication, along with the healthy free cash flow and liquidity they both have. FMC saw its net income dip into negative territory in the last year, which is a concern. Free cash flow and cash are both improving for FMC, which provides a useful counter to this number, but negative net income also leaves little room for error. With all of that fundamental data in mind, it's impressive to see that all 3 companies are priced at levels that make them extremely undervalued. That implies the long-term opportunity in all 3 stocks is well above what you'll find in today's generally oversold, overvalued market. FMC offers the highest dividend yield to provide an attractive passive income source on top of its bargain opportunity. I hope you found this useful. The analysis that I've shown you for these stocks uses all of the major principles of the Rebel income system that I use myself and that I teach to my clients. You can click on this video to learn more about how Rebel income works. Thanks for your time, everyone. I'm Thomas. I'll talk to you again soon.